who needs help or have questions about, you know, the whole process. Now, every Monday, and my camera keeps shaking, every Monday and every Thursday, I do a session where I come on Zoom and I basically teach, like, same way how like Ray has videos and stuff that he teaches through IML. I just do it myself basically. So I'm just hopping on here now to answer you guys' questions because I know a lot of people have questions because a lot of you guys are new and like new. And if you haven't just started this week, you could have started like the week before. And this is all very strange to y'all. I know it was the same way for me when I first started. I had so many questions and I felt like I was so lost. So I don't want any of you guys feeling like you've been left out here in the dark as far as when it comes to trading or when it comes to how this process works as far as the company. I want everybody using the tools that are there. That's why we have them for. You know, I mean, it's good that I can answer questions, that Ray can answer questions, that Steph can answer questions, but make sure you guys utilize the money-making tools, man. We want you guys coming in here making money, practicing with demo, doing what you need to do to make money in the beginning, and, you know, learn and earn at the same time. That's all we're about. That's all we're about. We're about people making money and learning how to make money. And so I know some of you guys in here are also building teams. It's not something you have to do with us at all. But if you are, I might not cover a lot of that on this call. I mean, if you guys have questions, I know Ray can answer some too. And for everybody I text who's on this call right now, I say get your questions ready because I want you guys to ask questions. I'm not gonna say I don't like when people come in and they're just silent. I feel like if you're not asking questions, you're not actually going through the stuff and trying to take your time and learn it. Because my thing is, how can you go to learn a new language and not try to learn a new language? And then the new language this time is, you know, is trading in Forex. A lot of you guys never seen this in your life. Oh, I just got a message just now. Okay, it's not important. But like I was saying, a lot of you guys never seen this in your life. So, I mean, there's going to be questions. Don't be afraid to ask those questions. Don't be afraid to definitely ask those questions in the group chat also. That's why we have the group chat for. It's this place for you guys to ask questions and stuff like that. So with that being said, I'm not really sure how I'm gonna jump this bad boy off, but I know I got Buddha Trayvon who's on the call right now. I got him using the Harmonic Scanner, and he's actually having some success with the Harmonic Scanner, as he should, because he's been using it. He's been asking questions about entries and how to get in trade and how to know when to get in trade and when to get out of a trade, stuff like that. Stuff you need to know basically to make money. So with that being said, do you guys have any questions off the rip that I need to answer for you guys? I'm looking at the chat over here. And also, if you have a question that you aren't too sure on, you can unmute yourself and just ask it too, because I do have the chat opened up. The question says, do you use EMA or MA? A lot of people do. I do not. When you look at one of my charts, matter of fact, I'll open up TradingView real quick and share this with you guys so I can answer some questions over some TradingView stuff. Now, for you guys who are brand new, like just started this week and don't know, we all use a website called tradingview.com. Now I'm about to show you guys that. Let me share the screen. Hold up. I'm going to actually move this over to the big one here. So let me try this one more time. I'm going to share this. So guys can see my screen. So we use tradingview.com, and TradingView, it shows charts and graphs and everything for everything, like not just Forex. There's crypto on here. There's stocks on here. There's everything. Everything basically can be traded. So right here it says currencies, futures, all that stuff is on here. But most of us, all we trade is Forex or crypto. So that's what we use. Definitely get familiar with tradingview.com. Now, you don't have to use TradingView if you don't want to. You can do everything that we do. You can do it through MetaTrader 4. Now, MetaTrader 4, again, for you guys that don't know, who are brand new, you absolutely need MetaTrader 4. You need that in your life. That's how you enter and exit your trade. That's how you make your money. Let me see what this chat went at real quick. Oh, where's the chat at? Am I tripping? I think I'm tripping right now. Oh, here it is. It's covered up. So your screen says Zoom. So can you guys see my screen, right? Am I tripping? Oh, that's why I am tripping. Here you go. Here you go. Is that better? There you go. Okay. So now I hope you guys can actually see this time. But we all use TradingView, and you can also do the same things in MetaTrader 4 too, like I was saying. But my bad, y'all, for not sharing the screen the right way the first time. But hold on. Let me go back and read these questions now. So, do I use EMA or MA? I don't. I used to at first, but the way I trade now, I kind of feel like I don't need them. Which, I mean, you know, it's kind of a preference thing because everyone trades differently. Like, that's anything. Everyone trades differently. So everyone trading differently. Some people live and die by the EMAs, and the moving. Well, if you know what EMA is, it's a moving average, and some people don't. I just don't. This is how almost all my charts look. You'll see patterns on here. You'll see red blocks. You'll see green blocks because these are my entry zones for my patterns, and that's what these are. So next question. It says, what are your confirmations for the Harmonic Scanner? So definitely I'm not going to actually open the Harmonic Scanner. I'm going to show you guys on here exactly how it looks and what do you do and how you know about it. So for instance, you see this pattern right here. I'm going to erase that Fibonacci. So you guys see this pattern right here. Let me rewind this. And I'm going to type out exactly how the Harmonic Scanner would look. Because I trade harmonics. I want to become the Harmonic Scanner. So I kind of, you know, trained, do raised teachings and stuff like that. I've been doing it myself for a while now. I try not to lean too heavily on the Harmonic Scanner. Now, I did in the beginning when I didn't know how to trade, but now I don't because I don't want to be dependent on it. I'd rather just be able to do it myself. I'd rather be the Harmonic Scanner than use the Harmonic Scanner. But the Harmonic Scanner is a very, very powerful tool. You guys see I have a little pattern on here already. This is a Gartley pattern. Anyone who knows that I trade the Gartley heavily. So this is how the Harmonic Scanner would be set up. It'd have your entry on there. I'm doing this for my purposes only right now. I'm gonna do another line. I'm gonna do a line. That's funny. But let me make this one red. And let me get rid of this. And let me get rid of that for right now. Matter of fact, I'll keep that right now. I'll just get the opacity down on it. So I need this. So it'll have your entry. It'll have your SL. If you guys don't know what SL is, it's a stop loss. A stop loss is there to basically protect your account from you blowing too much money if your trade does not go your way. And then it will also have, let's say, I'm just gonna put it right here for general, just for an example. This would be, oh, what you doing? This would be your take profit, or say TP. Okay, take profit. I can't spell at all, can I? Bam. So this is how this would be set up. And somebody's calling me, and I'm ignoring. So this is how the Harmonic Scanner would be set up. I know I'm doing like a million things at one time. And this should be blue. And this should be saying what it is. So this should be 107748. Now, so now that I've typed all this out, I can go back to the question now. What's your confirmation for the Harmonic Scanner? For any harmonic pattern, you're going to have an entry, a take profit, and a stop loss. That's not just for a Harmonic Scanner or harmonics in general. That's with any trade. Every trade is going to have an entry. Obviously, you have to get into it. Every trade is going to have a take profit. If you set one, or you're going to manually close it out, every trade should, especially in the beginning, have a stop loss. A stop loss is just there to protect you from biting the bullet on a trade that didn't go your way. For instance, when we enter any trade, we look for our trade. This right here is going to be a buy. We're looking for a buy to go from here to right there. But what could happen is the price can go down here. The stop loss is just there to protect you in case this happens, in case price goes down. So if price goes down, hit your stop loss, you're out that trade. Now if price goes your take profit, you're in that trade. Now, I don't use movement averaging or anything like that. My confirmations come from my setups on my patterns. Like you guys saw, I had a line right here. I had this black line right here. This is a daily level for me. This green box is my entry zone. I knew that if price pushed down to this daily level, that's fine. I'm still gonna get in this trade. I'm still riding this bad boy out to take profit. So when you go on the Harmonic Scanner, for any of you guys who don't know, I know that MetaTrader 4 looks a little bit different on Apple and Android. Let me go on it real quick. Yeah, I can go on it real quick. So when you go to enter a trade, go to new order. You guys look at my camera real quick. Where am I at? So you go to enter a trade. I know it looks different on Apple and Android. So when you go to enter a trade, all you're doing is copying and pasting these numbers. Your entry is where price is at right now. That's a market execution is what you're doing. But you can also put in a pending order. For the most part, on a Harmonic Scanner, if your price isn't like right here, like right where it should be at entry, I was explaining this to Buddha earlier this week. I'll go back to that too. I'm Justin. He asked me, how do you find a daily level? I got you. I'll come back to that. But how you do, basically, like I said, if price is at your entry or very, very close to it, or like a little bit past it, if it hasn't hit your take profit yet, or if price haven't hit your stop loss yet, you can still enter that trade. As long as it's not like up there close to take profit, because you want to enter any trade as close to entry as possible. So in a Harmonic Scanner, if you go in there and you see that that price is like right here, this close to your entry, it's like barely wicking past it, go and enter that trade for a buy. At that point, you're doing a market execution. Okay, hold on. It says, how will I know when the best time will be for me to use the patterns and jump in trades? Now, oh, I got you, say. So with that, we have the tool, again, the Harmonic Scanner. It finds all these patterns for you. I trade harmonics myself because, I mean, that's how Ray trade. And I found that when I was doing this, I'm like, man, this actually works because each pattern has a set of rules that you have to use. I can tell you have not been on my sessions. But everything has rules. It has a set of rules to it. Like that's why we trade patterns for, because patterns, since they have a set of rules to it, if it fits your rules, bam, you're good. Now, Ray, I'm pretty sure he has not been in a session because he just started like yesterday. But I don't know how he would be on there already. But Ray teaches harmonic trading every Tuesday and Wednesday. Like every single week, Tuesday and Wednesday, he has his sessions. Oh, everybody on here ain't new. I know the people that I know are new. But if anyone has been in your session, they definitely should know this. Let me tell y'all what to do with these patterns too. For you guys who are new, who want to learn patterns, learn how to trade patterns, what you do is you find one. I started off with the Gartley. That's why I trade the Gartley so much. That's the first pattern I ever started off with. And I feel like with me doing this for like a year, I'm even now, like in month like 11 of me only trading the Gartley. So I do trade other patterns, but me just trading the Gartley strictly, I feel like I've perfected it more as far as my entries and stuff go. That's why you see my green boxes on here. That's my entry zone. And by me even be able to find that, hold up, another question. Can you teach us how to mark up a Gartley? Yeah, I got y'all. I'm gonna do all that in a second. Let me show them first how to find this daily level. But I was saying though, for me trading this one pattern for a long time, I got intimate with this pattern. Like I traded because now it's like one of the first things I see now. Like I always see that first. So when I come to open up a chart, what I'll do is if I see a movement that looks like it could possibly be one, I just take my fib tool, my Fibonacci tool, and I fib it out and see if it fits it. And if it does, I look at my setup and look what's going on there, and then I enter the trade. Yes, Ray does go over all this in how-tos because Ray has hours and hours and hours of videos on his page. Again, utilize the tool, utilize what's there. Like, matter of fact, I'm gonna go to a clean chart. I'm going to load a chart. I'll go to one of my class session ones because these are kind of expendable. This chart looks a mess. So quick answer on how you find the daily level real fast. Let me erase this chart. I'll make everything gone. Literally, this is all you do. I go to the daily chart. You see I'm gonna, up here it says D at. For you guys who've never used TradingView before, all of these are basically just your time frames. So on your time frames, every single one of these candles is whatever that time frame is. So every single one of these candles right now is a day. So every single one of these is a day. And if I go down, every single one of these is 4 hours. So how I find daily levels is I literally open up my chart and let me select my, hold on. Thank you. Select my line tool, my horizontal line tool. And all I do is find points. I know Ray uses the line chart. I use the regular chart. All you do is look for points where price has been touching and rejecting multiple times. And so I look for points like, I'm trying to find a good one, like here, for example. Bam, drop a line right there. Why drop the line right there for? Because look right here. That's 1, 2, 3, 4 touches of this same line. And this on a daily chart, this is a daily level. I can go through and do that in multiple spots, like right here. You'll see those 2 points right there where price hit the brakes at? Drop that right there. And a lot of time, price comes right back to that. Now, remember that these aren't like a specific perfect line. These are more of a zone. So even though I drew that line right there, this zone where price can turn around at is more like this. So you see every time price comes to that general zone, it turns around. Now, how we utilize those is when you do trade patterns or when you do enter a trade, if you have a major like daily level right there or something like that, you know there's a chance that price can go test that. So if you're expecting to get into a trade at a certain point, you have a daily level right under it, just know that price might go and test that. And I go through and I do this like all of my charts, my finding my daily levels, going through dropping these lines. Should actually move this one here out. And again, you see how price right here, look at those 3 touches right there on a daily level. You can always tell when you found a good level too, because price will have done it in the past. So see in the past how many times price has hit that same line over and over again. You can just copy the same line down about right. Let me see. It's not the sexiest one, but in that general area right there, you see how price has been tapping it and waking it and turning around all right here in this general zone. So here and then all through here. You see that? How price has been touching that and turning around. That's how you know you have a good daily level. And when you go to a smaller time frame, let's say I go to the 15-minute, obviously there's more wicks and more things in it, but it gives you the same result. Like you have a nice daily level, you see that price still respects it on a small time frame too. Like for instance, in here, see how price is still tapping that and turning around on that same level that I drew on the daily time frame. That's how you find your daily levels. And that's the same way how you find your 15-minute levels, 1 hour levels and stuff like that. It says, can you teach us how to mark up a Gartley? Now, someone answered that question for me. It says Ray goes over all of that on his how-tos. And this Q&A is what? This is a Q&A though. Yeah, no question is a dumb question, which is right. I'm not saying any question is dumb at all. I mean, because that's what we're here for. I'm here to answer you guys' question, be it with trading or be it with anything as far as you making money with the company and stuff like that. I don't mean like building the team. I mean like straight up trading, like questions with trading you guys might have, like entries and stuff like that too. A lot of people always have questions about entries. That's one of the major things. And that's why I even use harmonics, because you have an entry on every pattern. So you know where you're getting in at. It says you won't have the same levels on each time frame, but those are the ones that pop up. Yeah, that's basically what it is. Any other question I might can answer right now? My bad, I forgot to answer this one earlier. It says, how do you know when's the best time for you to use pattern to jump in? We use patterns on like every time frame because they happen on every single time frame. If I go back to my main charts, I'm on a 15-minute time frame right now, but if I go to the 4 hour, I think that's what this pattern was drawn on, the 4 hour or either the 1 hour, you see this pattern still holds tight. It's just all about how you trade. Some people love trading the daily and love trading the higher time frames. I found myself more recently marking up my charts on the 1 hour and 15-minute because those patterns just happening back to back and popping off back to back. And you know, I'm the type of person who I don't like to hold trades for like 5 days. I want to be in that trade and out that trade in the same day. Let me hide this real quick and then make this one stand out so you guys can see it. I mean, this wasn't the prettiest pattern, but I dropped this in the group chat a while ago, back when price was still like this, before all of this happened. I know you guys see a lot of lines on my charts. Now, the reason why there's so much lines on here is because I am very heavily into using diagonal trend lines for my trading. And I found that gold loves and respects those diagonal trend lines. They love it and they respect it, because if you look over my charts, price comes to these diagonal lines so many times over and over and over. See the green diagonal lines and the black ones, price they just follow those. Look, even right here, it just zigzags its way to all those lines. Hold on real quick, let me scroll down to the next question. Does your time frame determine how long the trade will last? Yes, that's why you set that take profit and that stop loss, because you don't want to find a pattern on like the 15-minute chart and then have like a freaking 150 pip stop loss on it, because that thing's gonna definitely get smacked if price goes the wrong way. And if it doesn't get smacked, that's too much pips for a small pattern, if that makes sense. Like, but by me seeing this Gartley pattern right here, this big one's like a bow tie, by me seeing this pattern right here, I know that I want price to at least go right here in the middle. So therefore my take profit is set right at my right at this. Hold on, let me make this better. My take profit was set right here in the middle of this right here. See this little zone right there? So my take profit was set. So when price pushed up and did this, oh, wrong arrow. When price pushed up and did this, as soon as it hit there, I'm out this trade. Like, it's just that simple. This was drawn on the 15-minute, so I'm not expecting this to go all the way up here, which it did. It took it completed the whole pattern, but you don't have to get you don't have to get all the way up there, because your pattern size is going to determine how many pips you're trying to get from it. But sometimes things do happen where, I know me and Ray always talk about this one. We had a pattern all the way on gold. This was way down here before gold made this giant push up. We had a pattern all the way down here. Now, you don't expect a pattern to go for this many pips, but it did. Like, this one just kept on going. That pattern was like the jump off spot of all of this movement. But you would never expect it to go that far at all. But it does happen sometime. But you're not in it to win. You know, you're not in here to break the bank on every single trade. You're in here to win the trade, not try to like get $100,000 per trade. It says, someone else answered it. It says, out of curiosity, would you be able to identify if gold is on a supply zone on 1 hour or 4 hour? Yes. This is out of curiosity. Would you be able to identify if gold is on a supply zone? Yeah, you can definitely tell. That's what I use my my levels for. All these lines you see on here. These levels of support and resistance are basically supply zones for Forex. So let me go down to the 15-minute. I use these, for example, I know that if price, like for instance, you see how price dipped down under here real hard? This diagonal trend line right here is black. This means I drew on the daily time frame. Now I know that if price taps this black line or came anywhere close to it, it's probably going to reject. Because this is one of those zones where price was basically coming down here and not wanting to be stuck in. Let me draw a big rectangle all the way across. Look at every single time price was coming down here, it was turning around all the way from back when it broke above it. So I mean, it's basically showing that price doesn't really want to be down here. This is basically this supply zone for this, like where every time you see, there's actually a head and shoulders on here too. If you guys know what a head and shoulders is, it is this movement right here. This is a head and shoulders right here. But you guys see that every time price came down here, it's been rejecting. So I know it's just a higher probability that when price gets there, it's going to bounce off that spot. And that's what we use these levels for. Just like I knew, you never know, you never 100% know. It's all about probability of you knowing what can possibly happen. At the top of this too, when price was reaching this highest high, every time price peaked above this diagonal trend line right here, price rejected off of it multiple times. All right here, all of this movement right here, this right here, price didn't want to break above that diagonal trend line, even all the way back here. When it finally did break above it, it shot right back under it and came right back to it again. It respected that diagonal uptrend. So when I see that, I know that when price gets somewhere generally in that zone, it's a good place for a sell. It says, but wouldn't the number of pips kind of tell you, oh, it scrolled up just now by itself. Hold up, where's it at? But wouldn't the number of pips kind of tell you how much you would lose a gain? Yeah, it does. But amount of pips you're going to get depends on where your take profit is set up, where your stop loss is set up. Now, again, you don't want, if you draw a small pattern, you're not expecting that small pattern to go for 150 pips. You might expect that small pattern to go for like 20, 30 pips. So therefore, you don't want to have like 100 pip stop loss on a trade. You're going to possibly get like 15 pips from. That risk to reward is not a good one. At the absolute like least, a 1-to-1 trade, like 1-to-1 meaning you're risking 40 pips and you might get 40 pips. That's probably the best bet you want to do. You don't ever want to risk like 40 pips to get 10. That doesn't make any sense. This next question says, so would it be possible for you to confirm if it's currently on a supply zone on a 1 or 4 hour? Sorry, I'm fairly new to this, and supply and demand is, so I just wanted to see if it was correct. I'm not gonna lie, like I said, most of my supply and demand stuff is built off of all these trend lines I have on here, because these trend lines show you where price wants to go at. Like, that's what's called a trend line. It's showing you the trend of price. I go through on every single chart I have on here. I can go through to any one of these charts. You're gonna see that. What is this? Oh, that's what I was just showing you guys on. I can go to any one of these charts and you'll see that all these levels I have drawn. Now, note that these are color coordinated. So every green line you see, I drew on a 1 hour time frame. Every black line you see, I drew on a daily time frame. Every gold line you see, I drew on the 4 hour. So I use these lines to determine if and when I'm going to enter a trade setup. Like, you guys see I have a low pattern hidden in here, and it rejected slightly and turned around. All I needed was a few pips out this pattern, but you see that this black diagonal trend line, price been respecting it. So even though I know it seems like you're stuck on the supply zone thing, right? Well, supply and demand zone, whatever, right now. But once you start marking up your charts and setting these charts up, you'll see that price is following the trend of not wanting to be in certain places. So, for example, see this big golden line in the middle? This is showing you that every time that price came here, it's been rejecting over 1, 2, 3, 4, 5 times. Even when it broke under it, it came right back to it. So that's a major zone on this pair. What is this, GJ? It's a major zone in this pair. So when price comes down there, there's a probability that you can be buying off of that zone because price has been rejecting until it finally broke it. Curious, how do you get your disabled objects to show ghosts like that? Oh, that's pretty easy. So they're not disabled. They're still here. All I did was I set up, like, thanks to Steph, I saved some presets on here. So let's say I go to, I think this was a Gartley or a bat pattern, doesn't matter. So for my bat pattern, this is how my bat patterns look. They're black and orange. My Gartley patterns are going to be gold, well, yellow and blue. And my cipher patterns are going to be blue and purple. And so how I ghost them out is I have one that says expired. I just make it like it's expired just so it doesn't clutter up my chart too much with too many patterns. So I know when all the patterns are dark on here, it's just like, well, all of them are bold. It's just so much to see at one time. But how you even do that is, I'm going to go to this one real quick. I'm going to draw a pattern real quick. I'm going to draw a random pattern. So let's say I got a pattern right here. It doesn't matter how this pattern looks. So let's have this pattern right here, right? All you literally do is go in here. All I did, take the opacity down. That's all I did for the outline and for the inside. And then you can go in on here and save it as a preset. Over here, it says templates. It says save as drawing template. And that's all I did. Yeah, it's just them setting the transparency and keeping it on there. But I did it so that when I share charts to people, it's not like 50 different patterns on there. Because sometimes I have like 3 patterns back to back, but I want you guys to focus in on this one I'm trying to show y'all. So what I'll do is ghost the ones out that aren't important, and I'll show the one that is important. For instance, on where's it at? Where's it at? Where's it at? There's too much stuff on here. There you go. Euro USD. This is the wrong ones. Oops. So let's try this again. Euro USD. For instance, Euro USD, you see I have patterns ghosted out back here because there's still potential patterns, but the one that I'm currently in is the smaller one. So the smaller one is here, and it rejected my entry zone, but I also have a bigger one here. You see it? It's hidden out, but I don't want you guys to focus on the bigger one. I just want you guys to see the one I was talking about for the entry. So it hit entry and rejected. But again, there is a bigger pattern here. If I go and bam. Now, if I showed you a chart like this, you'd be like, what the heck is going on? Why is there 2 patterns like that? So therefore, I just ghost this one out in the meantime until price starts pushing down there. So bam. So that's not the focus of the chart. Yeah, it definitely helps with all the clutter on the chart. It says, thanks for the help. It thinks that's helpful for all the clutter on my chart. Yeah, I had the same thing where I got to the point where I was trying to draw patterns in different colors so that I would know which is which. But I feel like it just makes sense if I have, okay, if I send you guys a chart and you see a blue and yellow pattern, you know automatically this is a Gartley pattern. You see the green box, you know this green box is your entry on that pattern. Now, this one has multiple green boxes on it, aka my money zone entries, because I want you guys to see that no matter how this pattern plays out, like I drew this pattern before price got down here, obviously, no matter how this plays out, if you see price come to where this green box starts at, that's your entry for your trade. It can be your buy or your sell or whatever it is. I have a bigger Gartley pattern right here. I know that if price comes to this green box up here, I'm selling this. And if price pushes down to this one out here, I'm buying this. It's literally just that simple, because no matter what, if this little trade happens or if this medium-sized trade happens, no matter what, they're all still valid within this bigger pattern. So I know that price gets up here, this is my entry zone for that. And the perfect example of that is I have a lot of patterns on gold because I trade gold pretty heavily now. You see all these patterns I have on here. There's a bunch of patterns down here. This pattern is all the way back here. I just ghost them up so I don't want stuff to be all over the chart. But right here I had 3 patterns back to back to back inside each other. So when I want you guys to see the pattern I'm talking about, I'll just ghost the other ones out. How can we anticipate how high or low the market is going to go? I mean, you never going to exactly know where it's going to go at, but you can know which general direction it's going to go. No one here knows the future. Only one who can determine what's going to happen with a currency pair very, very accurately is probably Trump. You know, if he tweets something that these things are going to pop off, it depends on what he tweets. It's going to pop off real, real nice or real bad for a certain pair. For example, you see this gold Gartley pattern I had drawn on here. Let me go to Telegram real quick. So when I dropped this pattern originally, that's the point of one of the benefits of trading patterns too. When you trade patterns, you can get ahead of a lot of moves. I'm trying to move this out of the way. Bam. You can get ahead of a lot of moves. For instance, let me find the markup real quick. Gotta scroll back, making the camera shake. Matter of fact, I'll use this example right here. I'll use this Euro USD as an example that I just showed you guys. So you see how early I was able to draw this pattern, because I'm like, okay, I know when price comes down here, if it taps the zone, I'm in it. So the whole time when price is falling, I don't have to get in the sell and sell this all the way down. I don't have to, but I can. But I don't have to sell this all the way down. I just know that when it touches that, I'm in a buy. Now, you know, people always ask this question too when it comes to patterns. Well, why don't I just sell this down? I have different determining factors if I want to sell a pair down or not, or sell or buy a pair to entry. It just depends on how the setup, how I'm seeing the setup. But I do know that I want to say Khadijah sold us all the way down, or sold us down to the entry. That's why I posted on Thursday or Friday that if you're in this trade for a sell, at least take half your profits right now, or move your stop loss 30 pips in profit. At this point, we're at 60 pips in profit. But By me drawing this pattern, I can get ahead of this. I have plenty of different determining factors here. This black line, again, this black diagonal line is a daily trend line. This gold diagonal line is a 4-hour trend line. Yes, they are parallel to each other. I know that there's a high chance that price is going to reject this gold trend line. With that rejection, my entry is also in the same spot. So by that, I can go through and draw my green box at the end of my Gartley and then wait for it to basically hit. And you see it hit. Like it went right past that line. It tested it and rejected it. So it's not like you're like telling the future with it, but you're kind of predicting where price could possibly be going at. Where's my chat at? Okay. Yes, you can't anticipate how high or low it's going to go, but you can kind of predict and see where price is going at. And this is where those pending orders come in at. I was explaining to people all the time. I know pending orders, it's like sometimes it confuses people putting in a pending order, but a buy limit and a sell limit will save your life, especially when using harmonics or the harmonic scanner. Because what it does is it doesn't make you risk money to your entry. Now you can buy or sell to your entry, but you don't have to. Let me get rid of those. So I was saying with gold, and again, no strategy is 100%. Like even harmonics, sometimes they get blown straight through. It happens. But it's not about being 100%. It's about, whoa, what happened to my patterns? Oh, I'm on the wrong chart. About threw me off just now. For instance, with this Gartley, this big sell, I didn't know this giant spike down was going to happen. But I did know that price was rejecting this daily level right here. And I do know that price needed to go for a sell for my entry to be activated for a buy. So, I mean, it's just basically you're kind of getting the probability on what could possibly happen to a pair. I didn't know for sure. This might have been a news move down or whatever. Don't know. But when I have a pattern, none of that even matters. It doesn't matter what happens with news. A lot of times, news is just going to make your it's going to trigger your pattern, make your pattern happen anyway. It's giving it motivation to move. A lot of times, you see a giant move, like for instance, something like this. It's because it was a news event or maybe a Trump tweet or something like that. Something major happened to give price that much motivation to push up hard or push hard in one direction. That's also your impulse leg, as we call it. That's a pretty strong impulse in one direction. And you see that I have this big blue pattern that's ghosted out. Let me hide this real quick. Let me hide this and make this one bold. Now, you guys see I have this big blue pattern right here. It's right at the entry zone right now. So this whole time from this buy from this Gartley down here, it's been riding all the way up. Now this is almost a perfect entry on the cipher. Is at the 786, and right now I'm just waiting for this bad boy to drop. I did a pending order on this though. I didn't enter this trade yet. I'm waiting for price to get past this diagonal daily line. This is how I'm saving myself some stress and saving myself some worrying about things going negative. Because I know that if price decides it wants to keep pushing up, I'm fine. I'm not in this. But when price comes down, I did a sell stop. When price comes down past my diagonal trend line, I'm in this trade for a sell. Simple way of looking at pending orders: buy, sell, limits, bounce off price. Yeah, actually, I drew a picture of this before. Matter of fact, I might have it on here. Let me pull it out real quick because I just drew a very simple picture of it. Because buy, where's that? Bam, right here. There you go. A buy limit. Ignore the chart in the background. If for all 4 of these moves, if this dotted line right here is your entry, for a buy limit, basically price is above where you want it to be at. You're expecting it to come down and reject off. So if this dotted line is your entry, as soon as price hits this and turns around, you're in this trade for a buy. Same thing with the sell limit. If your price is below we want to get in a trade at, and you see in the dotted line is your entry, as soon as price gets to this dotted line and turns around, you're in this trade. A sell stop now, with a sell stop and with a buy stop, your price is going the direction you want to go already. But when it hits a certain point, you're in that trade then. So for example, right here, what's the sell stop at? If sell stop, imagine this falling down and your entry is this dotted line. As soon as price hits this dotted line, you're in this trade for a sell. You're basically just expecting price to keep going the same way it's going, but you're getting in once you confirm that it's past a certain point you wanted to get to. That's why I'm doing a sell stop on this gold cipher instead of me like just entering a trade. Because there's a lot of momentum pushing this bad boy up. I don't want it to keep on skyrocketing. But another determining factor with this too is that's why I draw all my diagonal trend lines for. I have a green one right here, which is from a 1 hour. I have this black one, which is from a daily. I know that if price goes up, it could possibly push here and reject this and then makes this move down. When it makes this move down, I'll then be in this trade at a stop, with a sell stop right here. That's just confirming that it's going to stay under this daily trend line right here. Where did my chat go? Okay, here we go. So regardless, your loss and gain just depends on how much pips you are away from your stop limit. Hold up, stop limit. I don't know what stop limit is. It's supposed to be a stop and common limit and above your entry level. No, how my loss and gains depends on, well, this is how I do it. I just basically use my Fibonacci tool is what I do. But I also know that I don't want to risk a certain amount of pips. Let's say we all know how pips work, right? It's basically 10 times whatever you put in. So you put in a 0.01, aka a micro lot, it's gonna be 10 cents per pip. If you do 10 cents from trading with, every pip is gonna be $1. So let's say you only have a $50 account. You don't want to risk, you don't want to trade with a 0.10. I guess it'll help if I type this on the screen, right? You don't want to trade with a 0.10. It's going to equal that. Now, let's say your account is only $50 and you're trading with that. That means you can only risk 50 pips before your whole account is gone. So you don't want to do that. So what you would do is with a $50 account, unless you're like a trading guru, like some people are, you want to trade with this because at this point, every pip is going to equal 10 cents for you. So now I know that don't sound like much, but you get 50 pips with that. That's still $5 you won. You see what I'm saying? But if you get 50 pips with the 10 cent, yeah, you won $50 and doubled your account in one trade, but you're also gonna lose your whole account in one trade. You never want to risk your whole account on a trade unless you're just out here going crazy. And that could be going crazy in a good or a bad way, though. You know, it's all about how aggressive you want to be with it. But it's all about your account size. But you don't want to. You never want to risk your whole account on one trade, unless you're out here being reckless. And again, with these questions too, you guys can unmute yourself and just ask it. I know I'm over here like looking back and forth because I have, I know you guys can't see, but on my left screen is my trading view, and on the right screen is all the Zoom stuff. So I keep looking back and forth. But did I answer your question though, as far as the pips and the stop loss and stuff like that? You basically you just don't want to put like overextend yourself. Basically, you don't want to go in the negative on one trade.
Can you hear me?
Yeah, I can hear you. So
like, how much would you think your account should be if like you using, like you said, the dollar, the micro, for example?
If you're using the 0.01,
yeah, like if you're using the micro, how much you think your account balance should be?
If you're using the 0.01, that's probably I'll come back to that, Stacy. But if you're using the 0.01, that's for like you can use any size on any size account, honestly. But you want to use a size that's not going to blow your account if you go for a loss. And sometimes your account can get blown and you didn't lose a trade yet. Because what can happen is, let's say for instance, I wanted to get into a trade that I expect to go up. I expect it to go up. So again, I'm gonna draw a pattern real quick because I trade patterns. So I'm just gonna draw a little quick pattern. Let's say I want to get in this trade for a buy at this black line. That was my entry. But let's say price does this. Instead of price just hitting this line and going up, price dips down and then turns up. If your account cannot withstand this dip down and like because you overextended it, then it's gonna close the trade out for you. It's gonna be a margin call. So basically it's gonna close the trade for you. You would have lost a trade that you could have won because your account wasn't big enough and you over leveraged how much you were trading with. So let's say for instance this is 50 pips down and you had a $50 account using 10 cents. Once this thing hits this 50 pips down, it's gonna close you out this trade before it shoots up 500 pips because you over leveraged it. Someone says, Corey says, how do you add in the trending lines on a fresh chart. That's a pretty easy one to show. Hold up real quick. Okay, what are you doing? I do my, ooh, there's a lot of lines on there. I do my trend lines the same exact way I do my horizontal and diagonal line. Well, my horizontal levels of support and resistance. That good head and shoulders action right there. All I do is I go right here where it's just a tool called trend line. See right here? I got mine starred. That's why it's up here at the top. So I use it a lot. And all you do is you look for points. I look for low points, and it's kind of like I kind of eyeball how price has been moving up. You see how price has been like stair-stepping its way up right here? I can bet you there's probably a trend line in there. So what I can do is I can just grab. I'm going to go to just the bar. I'm just going to grab right here. I'm just seeing how this has been moving. So you see this is a little upward trend line in the middle of this. So now that I've done that, I can go and extend this in both directions. Like, bam. And the reason why I extended is it's showing me that a lot of times price comes back and does these same things over and over. Like it does these same moves over and over and over. And for example, you see how price down here perfectly did it too? Even though I drew the trend line over here in the middle, but look down here, it did the same thing. And this is all the same trend line. And price came back and did the same thing again, right here and right here. That's just a pretty good trend line. And I do that over and over. Now, how I do this, you can actually go in here and draw trend lines in every single direction you want to, because again, price comes back to the same moves a lot. But what you can do is hold down Control and click on this. You can just drag it. And I do this a lot because just to see where price is at or see how price is moving again, because a lot of times these moves are parallel. By me doing this, I'm just trying to see where price has been tapping at. For example, look right here again. Let me fix this circle. I don't like how it looks right now. I'm gonna turn this part down. There you go. Oops. So for example, look right here. Oops, I'm supposed to make a circle. Right. Try this again. Right there. You see how all I do is control and copy the same line over. And you see how price came there again, and then all in here, rejecting over and over, right there too. Those rejections right here and up here. This is pretty much where price is at right now. Like price wicked off that same point, and it came back to it, and it's right here right now. That's why it helps so much for me to have these on with my patterns, because I know that I have this pattern on gold, and it's right at a diagonal trend line. This might be a basic question, but how do I use the Fibonacci tool? Fibonacci tool. Now, I don't know every specific about the Fibonacci tool, but all you do is I use it to draw my patterns out. People use it for all different kind of things, but I know mine looks a little different than some people's ones look because I have it color coordinated, but price has to hit these certain levels it depends on how you're trading. It's kind of hard to explain this because what the Fibonacci tool is, it's used for so much different things. Like I said, again, I use it to determine my patterns I'm going to enter and why I enter it, because I know that let me find a better example than right here. Matter of fact, oh, I know what I can do. I'm going to scroll over here to the empty space over here, and I'm going to draw another pattern. So for example, when I have an impulse move on a trade, impulse move meaning price push real hard in one direction. That's my impulse move. I need that for every harmonic pattern, no matter what pattern I'm trading. I need that impulse move. So let's say I have an impulse move like this, and I go in before I even have a pattern, I'll grab my Fibonacci tool. I'm going from the bottom of this to the top of this, of the impulse move. And so I'm looking for, whoa, what the heck just happened? Okay, I'm trying to scroll over. Why won't you? Oh, why would you do that for? Get over there. Okay, there you go. So I know that I need my retracement, which is in this middle part right here. I need this to at least be 618. You see, it's at 618 right here. I need this to at least be 618. So that's how I start drawing my patterns. If I have an impulse leg and then a retracement to at least 618, retracement meaning that price came back. For example, if you see a big move anywhere on any chart, you're going to see that price kind of retraces. Like you guys saw that I had this pattern right here in the middle. I'm not measuring it out at all, but I had this pattern right here. This retracement is this part in the middle right here. This is your retracement. So let me replay this. So when I come on here and rewind to about right there. So when I come on here, I'll grab my Fibonacci tool. I'm like, okay, I have a big impulse right here. You guys see it. So I'm grabbing my fib and I'm going from the bottom of this impulse to the top of this impulse. My retracement is the middle part right here. I need this to at least be 618 on my Gartley pattern. So I see that, okay, it's at least 618. So now I can get rid of my first fib, and now I'm fibbing from this point to my retracement, and I'm seeing what I got. Now I have a certain zone price needs to hit for me to be able to get in this trade. It needs to at least hit 618 again. That's why my 618 is blue on this. It just stands out. So if I come in here and fib something, fib meaning use the Fibonacci tool, I know that if I see price go past these blue lines, I'm in this already. Who's drawing on my screen right now? But it's just that simple. Like I don't know what other people use it for, but I use it for trading these patterns. Some terminology retraces for fibs go in the direction of the move. Hold up. Some terminology retraces for fibs go in the direction of the move. If you do fibs against or backwards towards the direction of the move, those will technically create extensions. Oh, you're explaining it. Okay, it can get confusing. Yeah, it can get confusing. Oh, someone accidentally drew on the screen. Yes, you can have it. You can't have extensions both ways. I use my, well, no, I never use the fib. No, I can't talk. My throat's getting dry. I never use the fib extension tool. There's two different ones. I use a regular fib tool. Hold on, let me go over here. So I use the fib retracement. Then I have the fib extension. Ray uses this one a lot. So if you ever see Ray draw a pattern, he use this right here. All it shows is these zones up here. Now, being that I like to just use my color coordinated fib, I just use the regular fib and I still use those same zones, which are also color coordinated because they go hand in hand with my my cipher patterns. My cipher pattern, I know that if my C point of my trade, which I'm about to confuse all you guys who don't trade harmonics, but I know that if my C point of my trade goes from 1272 to 1414, I'm in this trade positively. So you see a red box, like this blue pattern right here is a cipher pattern. So this blue box, and this blue pattern you see is my cipher pattern. I know that if my C point, you see right here, gets into in this box right here and closes in this box and doesn't close below it or above it, it's valid C point for my harmonic pattern. I don't know how you erase that off the screen. Hold up. I don't know how you erase that. I'm just gonna do that real quick. Bam. But now I have a squiggle on my screen. I don't know how to erase it. Any other question I can answer? But yeah, the fib tool can get confusing. But if you know what you're using it for, it helps a lot. And also, you can edit how it looks. That's why mine is blue and black and color coordinated. You can edit how it looks. I don't like the rainbow color one they give you. It just looks weird. So all you do is once you fib something out, once you grab your draw a fib on the screen, click the little gear. You can go in here and change basically everything you want to. The background, you can make it all be one color. I have mine color coordinated to be at certain levels or certain colors, so I know that when price taps there, it changes that. You can have a background on here if you want to. I don't know why you need it, but you can have it on here if you want to. What's the point in that? I don't know, but I took mine off. You can pick which side you want your numbers to be on. Now, I do mine to the right because a chart moves to the right. So I know that if I fib and pull to the right, I have space I can actually see my numbers, or you guys can actually see my numbers. If I put these on the left, they'll be in the middle of the chart. For example, if I put them over here, see how all those are like in the middle of the chart? There's no point in having them on that side. You won't be able to see what's going on. So, any other questions? I'm trying to think what I can go over. I can help you guys. I showed you guys the entries on the Harmonic Scanner. I showed you guys a few things here and there. Do you guys, like, again, do you guys have anything else I can help with that's on top of your mind or have been bothering you? I know some of you guys just started the academy like within the past 3 days, so your questions are probably mounting. When I do my sessions, I also answer questions on them too. I don't answer this many questions, so what I end up doing is I'll show you guys how to do a Gartley pattern or how to do my trend lines or how to do things like that. And then I'll just go through and start marking them up. So questions will come up while I'm doing this. So, but if you guys don't have any questions right now, man, I know I've been speed talking through this bad boy, but I know if you guys don't have any questions right now, this will be recorded. And I will hop off and see you guys at 8 o'clock Eastern Standard Time when I hop back on here to do my session. Also, I have a YouTube channel where I record, where a lot of my recorded sessions go at. I don't put all on there, but for the most part, and everything is the same. This is my Instagram, my YouTube, my Facebook, everything is that right there. So if you have questions about that, whenever we mark up a pattern, there's a red folder of news. Should we end the trade? No. Now, the red folder of news. Oh yeah, I didn't go over that. My bad, y'all. So we have a website. Not we, but there is a website called forexfactory.com. You go to forexfactory.com and you go to calendar, see it right here at the top, and it shows you when news is coming up. So for example, on Monday at 3 in the morning, there's some big a lot of Euro news coming up. Now, if you're in a Euro trade and you're not sure what's going to happen, close that bad boy out, especially if you're in blue already, so you don't know what's going to happen, or at least move your stop loss positively. A lot of people didn't know you can even do that. You can move your stop loss in the blue so that you're not risking any money. At that point, it's a free trade. But if it's a red folder coming up, you have a pattern marked up, no, let that thing go. If you're not confident, yeah, exactly. If you're not confident with it, don't do it. Let me tell you a crazy thing. When I first started trading, like my first week, everyone kept posting about NFP on Facebook. I'm like, 'cause I had a lot of friends who were traders who actually traded. So I'm like, the heck is NFP? Had no idea what that was. And so here I go, naive and not knowing anything. I'm like, okay, everyone's talking about news and make money on news. I was on Lex Waves morning session. I used to watch his videos every morning at 8 o'clock when I was at work. I'd be watching his videos in the office. Like I have it on my phone. And they're talking about, yeah, NFP's coming up this Friday. I had no idea what NFP was. And I got wrecked. When I say wrecked, I mean, I'm glad I was using the demo account because that bad boy got blown from $1,000 to $0 in a demo account because NFP slapped gold so hard, it almost slapped the phone on my hand. That's how hard it was. So if you're not confident about these trades and don't know anything about news trading, don't be caught in a trade that might go against you. Now, on the flip side of that, let me go back to here. All this big impulse moves on gold, a lot of these are news moves, but it's like kind of anticipating them because I have patterns marked up on it. A lot of time, like I said earlier, news will make your pattern jump off. Like it'll be the beginning of your pattern moving because it's that motivation to create an impulse leg or impulse move. I was about to say something else too. I completely forgot what it was besides the news thing. But yeah, news can definitely be your friend too. People have been doubling and tripling accounts doing news, but those people who do that also, this ain't their first time trading something, so they ain't coming in here fresh faced. I always say that. People always say fresh faced, someone who's never shaved before, like brand new in this thing, trying to Is it 5 o'clock? Oh, it is. Gosh, look at that gap. Yeah, the market just opened 2 minutes ago. Look at that gap up. Let me erase this off my chart real quick. Now, since the market's open now, let me look at gold and see what it did. Nothing. Didn't even move yet.
It opened at 6, bro.
It's open at 6? Oh, am I tripping? Is time off? My time off?
Yeah, you tripping.
Oh, I am tripping. What was that one just now? Oh, no, I thought it opened up for just now because it adjusted by itself just now. I'm tripping. Because I rewinded. Yeah, we good though. Like for instance, remember I said all patterns don't play out? This one on EJ, you see how prices went straight past my entry zone? It happens. I mean, that's why I have a stop loss set there. I usually set my stop loss at 1.113 or right below it. So you see how I was, let me find my tool real quick. What am I looking for? I'm looking for this. My risk to reward tool. So you see my risk to reward ratio? It's basically this is what it is. You see, it's more green on here than it is red. I wasn't risking much to gain a lot. You don't ever want to be like, you don't ever want to be like this. Like you're trying to get this much, but you're risking this much. At this point, it ain't worth it even getting that trade. That's it. At the most, you want your risk to be 1-to-1. Like if you want 10 pips, risk 10 pips at the most. But you don't ever want to go for 10 pips and risking 50 pips. At that point, it ain't worth it at all. So how much do you put in your trades when you start out? I mean, it all depends. It all depends. It depends on what size account you start with. You start with $100 account. Don't be out here trading with like, you mean like how much I start my account with? I start with $150. But don't be out here with a $10 account trying to trade with a dollar lot size. I think you need to put that in. That's 1 pip and you done. And I'm exaggerating with that a little bit, but yeah, don't be trying to have a small account and then trading with a huge amount. Because it's the same thing. Let's say you only trading with 5 cents. You're trading with 5 cents and your account is only $50. The higher lot size you use, the faster that money's going to move on you. And they can be moving fast for you or moving fast against you. But yeah, how much I put on there was just $150. That's what I started my account with. My first one. Oh, where'd my chat go again? I keep on doing that. Where'd the chat go? Okay, it's back. Any other questions? I guess that's a no. A nay-no. I know it's all over the board, all over the place answering these questions, trying to answer for everybody. But yeah, I hope I cleared some things up for you guys. If not, I know probably not everything. I hope I cleared some things up for you guys. Yeah, I'm back at 8 o'clock. 8 o'clock p.m. Eastern Standard Time for my guys who are not in America or on the East Coast. It says for a $10 account, you can only trade 0.01. Under $2. Yeah. I mean, that's basically what it is. Yeah. Because you don't want to be risking. There's actually like a chart that shows you what you should be trading. You want to do like 0.01, basically 1 cent per $100 in your account. So even when you have a $1,000 account, you should be trading like 10-cent trades. Because again, it comes to that risk reward and that not say safety net, but your stop loss and stuff like that. You don't want to risk like 10% of your account on one trade. You actually don't want to risk more than 2% of your account. I know a lot of people actually don't follow that, but that's what you should be doing. The rule of thumb is you can, if you're winning, or even if you lose, but you actually have proper risk management, you're not going to blow that account anytime soon. But if you have improper risk management, one loss can take your whole account out. This is way too bright. Okay, with that being said, I'm about to hop off, guys. I'll be back at 8 o'clock, which is in 3 hours. I might hop on here like maybe 7:45, but I'll be back with an actual class session, not just Q&A. But y'all guys be easy, and oh yeah, check out my YouTube too, because I have a lot of my classes are on there too from what I go over. All right, guys, I will holler at y'all at 8.